Hello everybody and welcome to another video of DIY investing. For today's video, we're going to be breaking down every single one of the Bitcoin bottoms at the end of the bear market, mapping out how much time it took before we started the next cycle, and analyzing where we're at today in hopes of finding out when the true bottom is actually going to take place. Thank you guys so much for tuning in, and with that being said, let's jump right into it today. Now in our last videos, we've been talking heavily about what we kind of needed to see for a true bottom inside of our bear market. Now we're going to take this a step further, and I think that the most important thing that we can do by analyzing how our bottom could look right now, if we are in a bottom right now, or if we need to get some more downside, is basically looking at how every single one of the prior bear market bottoms have looked, how much time it's taken before we've ultimately cemented a true bottom, and then what was the aftermath after we actually started breaking out again. And I think that one of the best ways that we can simply go and look at this is going all the way back into the very beginning of Bitcoin, all the way to the very beginning of the cycles, and simply taking a look at how everything has played out in years past. Now keep in mind guys, if we go further back from this point, there just isn't really any price history, and this was basically the first cycle that Bitcoin ever had. And now every single bear market has been different. There never has been everything exactly the same. They always kind of follow their own rhythm. And they go into their own new path inside of the next cycle. But one thing I have noticed is the time frames that it takes, usually in the build-up phase, is generally about the same each cycle. Now, inside of our very first cycle, we can see that we got the lowest low right here at about the end of November. We made a lower high, a lower low. We made a higher high and then a higher low. And if we come over here and draw, we pretty much consolidated for about 200 days inside of our first higher high before we started breaking out into our next impulse. And so inside of this cycle, this bear market specific, it was a little bit different than prior ones. This one started straight off with an impulse, and then we just kind of went sideways here. But the length of time is what I'm really trying to get at here. This is kind of the average that I've seen inside of the market. Inside of Bitcoin, you're looking at 100 to 200 days of accumulation, and it really just depends. Now, inside of some of the altcoin cycles, whereas Bitcoin leads the cycles, we sometimes see altcoins kind of go a little bit more sideways. But for this video, we're mainly just going to be talking about how Bitcoin's bottoms have looked. So in our first cycle, we were looking at about a 200-day higher high before we started to break out into our next major impulse, right? So this is about a 200-day accumulation. Then we go for our next major cycle. This was the blow off top here. Start another bear market. Let's make a little bit of a bigger time frame here. And now we can see that this takes us to our next bear market. Now this is the one where I've kind of been talking about it a little bit more because I think that the current bear market today is resembling more so the one that we saw in 2015 than any of the other bear markets that we've seen up to this point. Now, as you guys can see, our major capitulation low took place here at about the mid-January of 2015. And then we can see that we pretty much went sideways for about 280 days before we finally started to get that next move of a breakout of this range. Keep in mind, guys, that this was pretty much the range that we sat in for Bitcoin throughout this period of time, where we made a support low and then a resistance, and we just consolidated inside of this channel for 280 days. Almost an entire year we spent going sideways inside of this range. Now, this would have been one of the more volatile bear market bottoms because this comes after an 84% correction. We capitulate. And then we kind of have to go back and forth inside of this ping pong ball for literally 280 days before ultimately winding back down with one final capitulation to retest the range lows. And so this was a really volatile time. And the reason why I've kind of been drawing conclusions that this bear market bottom was the most similar to the one that we're seeing today is because we don't have true confirmation yet inside of our major bottom. But the FTX collapse is very similar to what we saw right here, where Bitfinex actually got hacked, right? So the Bitfinex hack saw that Bitfinex hack saw that this market dropped, and technically, if you're looking at the Bitfinex chart, this made a lower low. But across the board on the other exchanges, this one basically just retested the range lows, and it reminded me a lot of what we saw when FTX collapsed. FTX collapsed. We looked like we were holding support. We made one more final capitulation. And that's why I say that our current bear market low could be in, but we don't have our for sure confirmation. What we saw in our first bear market was about 200 days of accumulation. Our second one was about 280 days worth of accumulation. And then this takes us to our 2018 bear market bottom. And what's interesting is we have this obvious pattern where every single bear market was taking longer, right? The first one was 200 days, the second one was 280 days. And I remember watching this bear market thinking, oh man, we're going to have plenty of time to accumulate this bottom. And a lot of people were thinking the exact same thing. If we go from the bottom of capitulation to the point of which we broke out, we're looking at just over 100 days worth of accumulation inside of this range before Bitcoin ultimately broke out. And so this was actually the very shortest period of accumulation that we had ever seen inside of a bear market. And what is so interesting is not only was this the shortest period of accumulation, but the move after the breakout into the new bull trend was the biggest that we had ever seen. If we look at what we're seeing here with the Fibonacci, and we come all the way down from the low, we tag all the way back up to the 618 Fibonacci level. And that was only after 100 days of accumulation. And so not only can the cycles differ, but they can catch you off guard, and they will catch you off guard. That's why I wanted to talk about every one of the bear market bottoms up to this point, because it's going to give us an idea of what we can expect moving forward. And of course, guys, we should always expect the unexpected. And I think 2018 was such a prime example of exactly that. If we come back down here and kind of look at how our prior bear market bottoms were and the breakouts, if we look at 2015, go from the high to the low, we didn't even tag the 236 until our breakout right here. And then we kind of stopped in between the 382 and the 236. So we literally spent 280 days, almost a full calendar year, going sideways in this range, only for the breakout to go up not even to the 382, right? So you can't just expect that because there was a lengthier period of accumulation on the downside that the first breakout is just going to be massive, because it doesn't always work out like that. And the same rule can be drawn all the way back over here into our first cycle. If we look at our Fibonacci, this first higher high didn't quite make it all the way up to the 236 before we kind of bottomed. But then the second high, kind of peaked in between the 0.5 and a little bit above the 382. And so we can see that based off prior bear markets, just because there's a lengthy period of accumulation does not mean that the next move that's going to break out is going to be massive. We can expect to see a more consistent, steady growth. And it's hard to say what that actually factors into our current bear market today. Now, for the sake of this video, I'm actually going to move over here and take a look at the total market cap, because I think that it looks a little bit better and a little bit more consistent with that 2015 bottom, right? Bitcoin had a little bit more downside inside of the FTX collapse, but I don't really think it changes a whole lot as of right now. Like I've stated in many of my prior videos, if you guys need to know, go back and watch the prior videos talking about the two scenarios that I see. Either one more final capitulation, or we're going to end up building a bottom much more similar to the 2015 bottom. Now here's the thing, guys. The overall length of time that we have spent inside of this accumulation thus far, if we analyze from the low to where we're at today, we're sitting at just under 200 days. So as it stands right now, if we're looking at long-term accumulations or what we've seen in prior bear market bottoms, the first cycle was 200 days, so we're right at that threshold. This one down here was 280 days, so we're kind of in between the first cycle and the second cycle. And then our third cycle was obviously the shortest one, being only a little over 100 days. So we've already doubled that length of time, which tells me that, we shouldn't be really looking at the 2018 cycle as any sort of confirmation. And that's kind of why I'm paying a little bit more attention to what we saw right down in here. Now, we're sitting at just under 200 days inside of this accumulation. Keep in mind, guys, that if we go for one more final capitulation that drops us back down another, 30-40%, then I would expect an actual V bottom. If we break down from this range, I would expect more of a V bottom where we do something like this, right? Where we come all the way back to pretty much reclaim the FTX support where we collapse from the FTX collapse, right? And then I would expect us to actually rally back up to about what we saw at our August high, or just below our resistance inside of the summer, right? When we bottomed down here and then rallied for a final new all-time high, I would expect that any sort of new trending inside of the new bull run will at least come back up to tag that level there, which if we pull up our Fibonacci, keep in mind that if we go for one more low, we'd be looking at a move up to the 236. However, if we manage to just kind of hold support here, and we don't manage to actually end up making another final collapse, which would make sense to me. I mean, if FTX collapsed, the third biggest exchange collapsing, doesn't send Bitcoin to 10K, then there is the definite argument to be made that we might not ever see another drop inside of the Bitcoin price. But we just need to see. Keep in mind, guys, with the total market cap, we haven't broken support technically. We've bounced off of our June lows the entire time. Bitcoin is really the only thing that actually did make a lower low. And so we actually can see more volatility inside of the dollar pairs. And that's why I actually always tell you guys to pay attention for the total market cap charts, because oftentimes they obey better price levels than what we would see inside of the Bitcoin US dollar pair. With us already being at this 200-day threshold, I think it's really important that we talk about what we could potentially see if our support here actually holds. Now keep in mind, guys, that if we're actually going to hold this support, I would expect that we're going to end up going sideways for a little bit longer. Probably at least 250 days. But if this is going to end up playing out like the 2015 Bitcoin bottom, then I would expect that even if we rally up, we could probably spend a lot more time just simply going sideways, holding above the June low that we saw in the summer. But that's just the simple fact of the matter. We're either going to see one more final V bottom, and that would kind of follow a little bit more on path with what we've seen with the price action. Because keep in mind, guys, I'm not going to deny it. The price action is pretty bearish. Let's remove some of these so it's easier to see. We did break down from a support level. We did retest that support as resistance, and now we're falling once again, sitting on the very lowest point of our support. So as it stands, based off of price action, this looks bearish. This looks like it's going to break down, and it looks like we will have one more final V bottom. But guys, in the exact same way that happened in 2015, we didn't actually manage to make a lower low. This ended up being our final capitulation before we literally just kind of went sideways here. The volatility died out, and then we started breaking out. And so I want you guys to be aware of all of our prior bear market bottoms, how they have all worked in years past. And with that being said, knowing how they have played out in years past, knowing the time and the length of time that it's taken before we actually cemented a true bottom, I think it's also important, with that in your mind, to consider the unexpected. We have never actually had a bear market bottom that was a V bottom, right? We never saw anything where we had one final strong capitulation and then it just instantly rallied all the way back up like this. We haven't seen anything like that. We've never seen a true V bottom inside of a bear market. And I think that if there is going to be a bear market bottom that ends up being a little bit more of a V bottom formation, this bear market of all of them, in my opinion, will be the most likely to have that happen. Obviously, I can't predict the future, but the fact that we've spent so much length of time inside of this range tells me one of two things. We're either going to end up creating another one of the Bitcoin 2015 double bottom formation fractals, or this entire move is a breakdown of a support range. We're waiting for one more final sell-off. If we get one more final sell-off, I don't foresee this being another one of these lengthy accumulations where we go to the side. I honestly believe that we would see a little bit more of a V bottom, because keep in mind, guys, the length of time that we've already spent inside of this range here, 200 days, right? The length of time that we spent inside of this range before our last breakdown was only 70 days, right? A couple months. With us spending so much amount of time inside of this range, and with us already being past a year from the all-time high, we're already extending deeper into this bear market than any of the prior bear markets. The longest bear market that we ever had was actually the 2015 Bitcoin formation. If we remove our drawing tools, let's come down here. This was definitely the longest bear market that we had. If we go from the all-time high to the low, this one was 410 days. And so if we're looking at where we're at today, we're already past that. And so this is a lengthy time for a bear market. This has been the longest bear market. And so that's what tells me that we have the equal as much opportunity that this could be us just making another bear trap before we make kind of more sideways action before our next breakout. And if that's the case, I would expect us to actually make a higher high, rally all the way back upwards of about here, pretty much the mid-range point before our last breakdown, and then us to come back down and retest it, something like that. That's the bullish case. These are really the way that I'm playing the market. We're either going to bottom here when the volatility dies. We're not going to make another lower low like a lot of people think. That will lead us to a breakout, a pretty big breakout at that. Or ultimately we break down one more final low, and that ends up being a V bottom. I'm not expecting another one of these. I don't think that we're going to spend a lengthy period of time rounding out and accumulating, considering the market structure is so vastly different than prior cycles. What we're looking at is pretty much on par with prior bear market bottoms. I mean, this thing corrected 74%, well, technically 75 or 76%, which is close enough at that point, right? Keep in mind, if we do have to end up making the same threshold as prior bear markets, what we're going to be looking at is about 80 to 84% inside of a drop. which 80% takes us, fairly close to where I would expect a bottom. But I would be expecting a bottom until about 82 to 84%, somewhere all the way back down in there. That's if we have one more final breakdown. But if we don't have a breakdown, we would expect to have another one of your typical breakouts into the next cycle. And I think that this cycle, more than ever before, there's just so many people trapped because of how little the bounces were. This thing just pretty much collapsed and went straight down. That tells me that there very easily could be the potential of us having a bottom just because of how furious the sellers actually knocked the price of Bitcoin down. And so really, guys, I'm not going to try and overcomplicate things, and I don't think that we should either. Have a plan for both. Let's trade it all the way through. I wanted to share with you guys these prior bear markets just as a way to kind of talk about the time that we've had. And as it stands now, we've had just enough time that we're either going to see a big breakout or we're going to see one more final capitulation. And so that's why I like to bring you guys these videos, just to bring awareness to what I see inside of the market. I've broke down every single scenario that I see happening inside of the market. And so from this point on, all we can do is simply trade it from here. So if you guys found value in this video, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also go ahead and sign up for my signals, follow all the trades that I take, follow my portfolio, and all of that fun stuff heading into our next cycle. Thank you guys so much for tuning in. Thank you guys so much for the support. I love each and every one of you, and I look forward to watching you guys make life-changing opportunity and wealth, most importantly, inside of this next bull run. Thank you guys so much for watching, and with that being said, I'll catch you in the next one. Peace out.